It's time for the market update.
Let's talk our market update now, Bill. We do this every show to kind of update what you're paying attention to, some of the most topical news, what's maybe in the headlines, and a couple of things that I want to run through with you. The first being the debt ceiling. We covered this a little bit on our last episode, and thankfully we talked about, hey, we expected the debt ceiling to be figured out and remedied, but we do have some news on that, and it looks like that's going to be behind us. They're going to figure that out. They get that all sorted out. But what does it mean now, kind of, as we move past this, moving forward? What are you watching?
So, as we all know, the debt ceiling issue is beyond us, and they have raised the debt ceiling, which means that the government can continue to pay its debts, which is very important. But up until that was actually put into place and the ceiling was actually raised, it does cause jitters in the market. Definitely took rates up a little bit in the short term. But now that that has subsided, rates started to come back down a little bit. So we were up over 7% on a standard 30-year fix. Now we're in the high sixes. So we're heading back in the right direction. And the bigger, longer, more chronic issue that's driven rates up over the past year and a half has been inflation. We just got some inflation data in today, actually. One of the components of inflation that we follow closely is the headline CPI. The forecast was 4.1 and it came in at 4%. So it actually came in a little bit lower than expectations, which the market certainly likes. So we feel like the predictions for these numbers from the analysts, that this is all they do all day, every day. They've been really accurate with these predictions. They think that next month we're going to get another number showing lower inflation. Again, that's going to be positive for interest rates. So, look, nobody knows for sure, and nobody has a crystal ball, but there are people that spend their whole lives working on these numbers. And we feel like there's a really strong chance that rates are going to continue to decrease as inflation decreases over the next 6 months.
Do they actually go hand in hand? So, I mean, if we're watching this casually, we can kind of see the inflation numbers come down in July, August, potentially. Does that automatically mean that mortgage rates will come down with it?
So there can be other forces that make the decrease not exactly linear. So it could be, 2 steps down in rate, 1 step back up, 3 steps down, 2 steps up. So it's not a perfectly drawn straight line. But when you take the information and you look at it over a longer period of time, there's definitely an escalator down where you can see that, there's a channel, and within that channel, rates continued over time to move lower.
Okay. And then with the inflation data too, does that also impact, I guess, home buying and just the interest in people to go back out and continue spending money again? Because I know it's kind of tightened everyone's budget over the last few months. Will that impact it at all?
Yeah, so that's a great question. So there are studies and surveys, and the studies and surveys say that rates under 5.5% will entice more people to go out and buy. Over 5.5%, whether it's psychological or it's budgeting or it's the payment just won't work, is very prohibitive for people to go out and buy homes. So 5.5% marks a threshold where you're going to have more people entering the buyer pool.
Anything else, Bill, you'll be watching over the next few weeks besides inflation numbers?
So we're watching the economic calendar daily, and anybody that we're working with, we're making sure that all of our decisions on when to lock the rate, try and get you the best rate possible, we're coordinating with what's going on in the market.
All right, very good. Well, if you have questions for Bill, want to follow up, or you're interested in beginning that home buying process, want to take advantage of the free mortgage and loan consultation that he offers over at Cross Country Mortgage, you can do so always by calling 484-352-4151 or log on smartmortgageshow.com.